All right, welcome to Road to Success. Today we are joined by a different co-host, Pete.
Andrew
Uh,
Dioni.
Andrew couldn't make it today, and our guest today is Margie Winkleman.
Hi, thank you for having me.
Yeah, so Margie is our head underwriter, and she's gonna talk to us today about her life and what it's like to be an underwriter, and how she got here, you know the whole 9 yards.
Margie, I have a question just to kind of, I guess, get us started. Do you have underwriters in a lot of different fields? If you could define what an underwriter is, just from a very general point of view, that would be helpful to kind of get this.
So, an underwriter, we have underwriters in the mortgage industry, we have underwriters in the insurance industry, and they are the ones that are making the decision. They are the ones that are saying yes or no. In our case, it's to an approval for a mortgage loan. So I kind of accidentally fell into this business many, many years ago. I won't quote a number. I was young. I got a job working in the mortgage department of a bank. And I liked what I was hearing. I sort of had a knack for it, picking up on things. And then they asked me, would you like to be a processor? Okay. So I became a processor, which is the person who gathers all of the information from the borrower to send it to the underwriter to make the decision. And I was at the bank for about 18 months, and from there I decided that I needed to learn how to do FHA and VA loans, so I took a job with a mortgage company. And I was there for about 18 months. I learned all about MMP. Back then it was a whole different animal. You had to type up all these documents, and you had to hand carry or courier the packages down to CDA to get them to approve it for you. But then from there, I went to another mortgage company where I stayed for 19 years and helped to build that company from the ground up. And then over 15 years ago, I left there and I came to work here. I love primary. I love what we do here. The mortgage industry is a very service-based industry, and I think that what really sets us apart from other companies is the fact that, I have a team of 10 underwriters, and we all believe that it's all about the borrower. Yes, there are realtors involved, and of course there's loan officers involved, but it really is all about the borrower and what is best for the borrower. So we try to find ways to make the loan work. All lenders have the same guidelines, but there are gray areas, and sometimes you have to think outside the box. And I love nothing better than being able to say, approved, 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 knowing that we're putting people in homes. It's a good feeling.
Yeah, and I feel like a lot of people probably have the question of, well, what income can I use? Because I know sometimes they go, well, I just started this new job, or I just started a business. So could you elaborate a little bit on, what is a qualifying income?
Sure. So when we are looking at income for a borrower, we're looking at several things. We're wanting to prove stability, so we're usually looking at the last 2 years. We want to see that you have been employed. Now, it could have been different jobs. Maybe you've moved around a little bit. Maybe you were in school and you had like some type of part-time job, and you've now graduated and you've just really started out on your career. That we can definitely work with, but we're basically looking for a 2-year stability of income. So even if it has been different jobs, if you're making moves on your job to better yourself, maybe it's better benefits, maybe it's a little bump in income, we're okay with that. I'm looking at the stability of the income. There are different types of income. There is salaried income, there's hourly income, and underwriting does view those very differently. If it's a salaried income, that tends to be a little more stable because it's a salary.
Right.
If it's a borrower who is hourly, then we do have to average over a period of time. So in those cases, sometimes we may not be able to use as much income as that borrower is making right now, because last year in 22 they weren't averaging as many hours, and so we do have to take an average of that. But I look at the whole situation and try to come up with ways to be able to use the most income that we can. There's also all other types of income that borrowers receive: alimony, child support, Social Security income. The list goes on and on. There's housing assistance. There's all kinds of things. And the key to those types of income are being able to prove that it will continue for at least the next 3 years. And if we can prove that, for instance, if you're getting child support and your child is 5, well, we know you're going to continue to get that child support for a number of years. So if we can prove that that income is going to continue for at least the next 3 years, then we're able to build the case to use that income to help you qualify.
All right.
Interesting. And is there anything that potential home buyers should avoid before they're looking to, go out and start to shop for homes or get approved?
Don't open any new debt. Don't go out and buy a car. Don't get sucked in. You walk into a department store and you're going to buy these things and they're telling you, oh, well, if you apply for our credit card, you'll get 10% off. Don't fall into that trap. Don't
Here, buy this couch.
Don't fall into that trap and create additional debt, because it will affect the amount of buying power that you have. Wait until after you settle on the house to make any big purchases.
I always try to tell people, look,
debt.
you want the car, you want the furniture. After you have the house, go crazy if you want to.
Well, get the house and feel comfortable with the house,
Right.
Truthfully.
Right.
We want to set people up for sustainability. Look, underwriters can approve anything they want pretty much. I mean, some people joke and they say, oh, underwriter's God. Well, we're not God, but we do have the ability to make those decisions to say yes or no. But I don't want to set someone up for failure. So,
Right.
If you have somebody that you are pushing them right to the brink, let's say they've paid $1,000 a month in rent, and now you've put all this together and they qualify to have a $4,500 a month house payment. We're sort of maybe pushing them to the brink, and it's going to be like a payment shock.
Mm-hmm.
These people are used to being able to travel or go out to dinner or shop or spend money, and now you're putting them in a house that the rest of their lifestyle is going to change. So you want to be careful with that as well.
Right. And I feel like that's the biggest difference between just trying to do a transaction and trying to actually look out for people is that
Yes.
you're trying to make sure that they're set up for the future.
Exactly.
Because this purchase just isn't for the next couple of weeks.
No.
It's for the next 30 years.
Well, hopefully they'll move on to something else, I mean, we like to have those repeat customers, We love
Right.
first-time home buyers. Those tend to be the ones that are a little more challenging, because they don't have a lot of money to work with. They might be getting a gift from a family member. That's another thing, Pete. You don't want to have any large deposits into your bank account.
So what does that mean? What's like a good example of like a large deposit?
So if we are going to be doing a government loan, a large deposit is anything that's 1% or more of the sales price.
Okay.
So let's say you're looking at a $300,000 home, or you're in that price range. So any deposit that you would make into your bank account of $3,000 or more, we're going to have to source. And, you can get a gift from family members. That's absolutely perfectly acceptable. We just have to be able to document that.
Right.
The gift donor has to be willing to sign a gift letter stating that they gave that to you and they don't expect any repayment on that. But you can't just drop money into your account without being able to explain where it came from. For instance, you can't decide, oh, I'm going to sell something that I have in my house, furniture or whatever.
Right.
The problem with that is that, number one, you can't prove that you owned the furniture. And number two, you can't prove what it's worth. So selling personal property doesn't work to say this is where the money came from.
Unless it's like a car.
You could sell
or
a vehicle. You could sell, perhaps there's a piece of jewelry that you have an appraisal on, and you can prove that that's the value of it. But you can't just sell anything laying around your house that you don't want anymore and say that's where my money came from to buy this house. So you always want to talk to your loan officer about where you intend to get the funds for closing so that we can guide you on the best way to be able to document that.
Right. Man, I feel like, Margie, you are just throwing out gems right now. You're just making it rain for the people. So speaking about qualifying, what would you tell someone, like personal advice? What would you tell someone when they're looking to buy a home on we have our ratios that we can go to, but what do you think? What do you think is really the ratio that, someone really shouldn't pass?
You know, it's so funny because many, many years ago, as I said, when I got into this business, we didn't have the automated underwriting systems that we have today. You know, we have AUS and we have LP, and none of that existed back then. An underwriter actually just reviewed all the documents and made the best decision based on all the documents that were in the file. We now fortunately do have these automated systems, which does help to make it easier because of all the algorithms that they have built into that based on the credit and the income and the job history that we have listed and the assets depending upon where they're coming from, whether it was savings, whether it's gift, whether it's seller contribution. You know, that system works to come out with this answer that, yes, we feel that based on everything that you have put in here, the likelihood of these people paying this mortgage back on time is good, and therefore we're going to issue an approval. So we do have that now that does help us to be able to make that decision. But the thing that I would really tell somebody is it can't just be a payment that you qualify for. It has to be a payment that you're comfortable with. You know, I could share a story with you guys if that's okay.
Yeah, 100%. We love it.
So, you know, I'm really big on a hands-on approach. I'm very, very accessible to all of the loan officers, all of the processors, all of the realtors. You know, I go out and I meet with realtors, give them all my cell phone number. I'm happy to help, whatever it takes to be able to try to figure out a way to make the loan work or to put the borrower in a better position. So years ago, when I first came to Primary, we had a set of borrowers who applied for a mortgage loan, and unfortunately, that computer system did not approve the loan. So I had gone through everything, and I was trying to come up with something to hang my hat on. What can I do to help this couple become homeowners? So they lived with family. They had 4 children, and the husband worked 2 jobs. The wife did not work. And when I looked at the bank statements, and believe it or not, a person's bank statements tells a lot about them. You can learn a lot about somebody when you look at their bank statements. So I go through the bank statements, and I'm seeing this man is working 2 jobs, and as fast as his pay is going into this account, she is spending it. She is going out to eat. She's going to the bowling alley. She's going to Skateland, the movies, all these different things. So I said to the loan officer, is there any way you could ask them to come by the office? I'd like to sit down and talk with them. Because remember, the loan officer speaks to the borrower. The processor speaks to the borrower when they're accumulating the documentation. It's rare that underwriters talk to borrowers, although I'm very happy to do so. So the loan officer said, sure, no problem. They don't live far from here. I'll get them to come in. So they came to the office, and I sat down with them, and I said, I really want to be able to approve your loan. I want you to be able to achieve home ownership. But I do have to ask, you currently don't have a housing expense, and you don't have a lot of savings. And to be honest, you know, as fast as he's earning this money and it's going into the account, you're spending this money and there's not much left. And I had the bank statements printed out, and I'm showing her the things, and she looked me dead in the eye, and she said, well, we live with my mother-in-law, and the children annoy my mother-in-law. And so when the children come home from school, I take them out, and we are out of the house for hours until basically it's time for the kids to go to bed, and then she comes back home with them. She said, so consequently, I don't cook many meals at home. We eat out, and that's why I'm spending all this money. But once we have our own home, I won't have to do that. Be able to cook at home, you know, won't have to take the kids somewhere to be able to do their homework or to be able to run around and play or whatever it was. And she said, I promise you, I will always make this payment because I don't ever want to have to live with my family again. You know, she just did not. And so that was one of those instances that, you know, you just sat there and said, do I want to take a chance or not? And I decided to take a chance, and those people always made their mortgage payment on time.
Wow.
So that's just an example of trying to read the whole situation and know, whereas on paper, it truly didn't look like they were ready. But once you heard their story and you understood where they were coming from and why what was on paper was the way it was a whole new perspective.
Right.
So that's a really, I love that one.
That's a
because,
really good story.
yeah, that's a feel-good moment, you know, when you know that you have really helped somebody.
Yeah. And I feel like the underwriter's job is just to make sure that at the end of the day, we work for this company and this company has to stay afloat, right? So the underwriter's job is to make sure that whoever we're going to lend money to is trustworthy and that they're actually going to pay it back.
Correct.
And that's what the underwriter is doing,
That's
is
what
evaluating the whole situation, making sure that this person's going to pay it back.
Mm-hmm.
And it makes it a lot easier now because we have the automatic underwriting systems that it already knows. It has the algorithms that, like, look, these people are doing the right things, and the likelihood of them paying back is high, right? And then we have situations like that where you do have to have a person. So I feel like this is a really good segue into where do you think this industry is going to be in the next 5-10 years?
Well, I'm hoping to only have about 10 left in it. I mean, everything is just becoming so much more, technological, right? So I do see that there are going to be advancements as far as that is concerned. I don't see that we ever get away from the human element. They're always going to need, there are other companies out there that it's all pretty much computerized. You apply online. I don't think you ever talk to anybody. Everything gets uploaded online, which, I mean, we have all of those capabilities
Right.
as well. But I do think that human interaction, because let's keep this in mind. The average person will obtain 4 mortgages in their lifetime. Now, there are many others that buy a lot of investment properties and whatnot, but the average person will purchase 4 homes in their lifetime. So when you think of something that's only going to happen probably 4 times in your lifetime, those are really big moments.
Mm-hmm.
It's not something that these people do every day. The whole process of obtaining a mortgage loan can sometimes seem a little scary and maybe a little daunting.
Right.
When in reality, it's easier to buy a home than it is to buy a car, to be perfectly honest with you. But I think some of that is because of the human element, And I think they are always going to need the loan officer, need the processor, need the underwriters. Although I do see that things will continue to advance technologically. I think that it's a very service-oriented business, and when it is, you have to have that human element.
Right. All right. So you basically, we're always going to be needed.
Always going to be needed,
Job
in my
security
opinion.
right there.
Job
for Mark.
I hope
security.
so. I hope so.
I feel like that's another good segue